a constant factor in the economy today. So how do you quantify this uncertainty and what do you do as an actuary? So I think I will go with Salome first.
Thank you. Thank you for that question. I'll come into those seconds, but I'll respond. When you talk about quantifying risk, you're translating an unknown issue to a decision maker to act on. So that could be anything. It could be a risk. It could be anything that you're working with. So when you're looking at uncertainty, what does the decision maker need to do? Act on based on your analysis. It could be setting a price for a product. It could be allocating capital to cover that particular risk. It could be any insight that they need to work on. So when you're quantifying risk, you look at the basics. You have the probability of that event occurring, you have the severity, how bad can it get if it does occur. And also you can look at any interrelated risk that can come on in the event that uncertain event does occur. So it does sound hook and candy, right? So you think they're going to come up with a number, and that is what the result will be. But we've seen historically that our models have been ravished, in the sense that we are not required to have a high level of precision within our numbers. So we look at maybe two examples that we've had of late. I'll say of late because I'm talking about the last 20 or so years. We have the first event, which was the 2008 financial crisis that happened, where we didn't envision that there would be interrelated tail events that would happen from the US all the way down to the Africa perspective. Then the second event that I would like to talk about was COVID. We have our food mobility rates, we have our beautiful mortality rates, and we know from a life insurance perspective, we expect this number of people to die, and from a sickness perspective, we expect like this number of people to fall sick. But with the events that happened, we saw that all these things accelerated our coverage. So this is where the actuarial practice comes in that decision makers do not, we are not required to give a full sense of certainty to decision makers. You tell them, this is what we know based on data, and this is what we don't know. How are we going to manage the unknowns in terms of maybe having more conservative numbers within our results? It could come with us giving a wide number of scenarios within our reporting, so that they're able to see like how bad can it be and how can we do, what can we do to manage the worst case scenario. Then lastly, as actuaries, we need to have a higher level of accountability, in that you need to be very, very transparent in terms of what you know and what you don't know. So when it comes to the role actuaries play, we do have very nice models. We have a lot of data we work with. We tell them this is the results we have. But we have to tell them there could be many, many other results that may come Then we give recommendations in terms of how to cushion the uncertain areas that we see that will come out to be in the future.
Larry, would you like to add to that?
What I would just maybe think to add is, you see, as actuaries, don't let us get to that point where we feel our model is always correct, right? So whatever we calculate, the mindset from when you start studying actual science. For example, you were presented with a mortality table and you see QX is 0 point something, right? You think that is it, that is correct. No. What it actually means is that the QX stays somewhere around that number, but that number we don't know, nobody. So what should we then be doing when we are quantifying risk? We should be clear about what we are certain about and what we are not certain about. What are the limitations that the quantification will perform? And what can we do in order to improve that education. We shouldn't present our results as if this is the final, right? So that's one. Is also in quantifying risk, we need to be mindful of ethical consideration, right? Sometimes because we are not, what we do affects lives, right? So say for example, you are pricing a life product. So it's not just to determine the premium, but this premium is going to be used to sell the product, it's going to determine the future of the company, but also you need to ensure some equity between or among the various policyholders, right? Take for example, different generation of policyholders or even gender, right? So all this we need to consider, put into consideration ethics.
Thank you very much. So, over the years, the work of an actuary has evolved beyond traditional means. So, I would like you to explain what more we actuaries are doing currently. Like we have the AI coming up, and sometimes I actually get so, would I say lost? I would use the word I am lost in every time I see AI. I know people always like, oh, AI is coming to take your job. And I'm like, no, not mine. So sometimes I get scared. I'm like, okay, everywhere I turn to, I'm hearing AI. I'm like, you probably need to do AI to wake me up from the bed at this point. So can you explain how actual our role as an actuary would evolve with this trend? Yes, please. Elvis.
Thank you very much. So I think I'm about the only student on the panel. So I'm going to give you a student's perspective. Alright? I have senior colleagues in the audience, so where I'm there will help question. Alright. I think the role of the actuary evolved primarily, of course, from estimating liability or insurance differences. But I think for you to properly envision the evolving role of an actuary, right, you need to start from looking at the concept of risk, particularly by life. Life in itself is an evolving microcosm. Things happen every day that some of them were planned for. So let's assume that we've exhausted the knowledge of estimating liabilities as of today. We have new analytics coming up on the scene. Before now, in the Nigerian market, primarily, we've not paid so much interest to credit risks and reporting and all of that. It's become fund donor conversation right now. With strong conversations happening between the US and the regulator to bring up a framework that will actually necessitate the reporting of climate risk and related consequences within the business. Of course, then we talk about AI. Everybody knows that the world is gradually becoming IT and to a great extent, like our president has said earlier, there are so many things AI can do for you, but you still need the touch of an actuary at certain level to make certain decisions. As far as a part of actual job that is called actual judgment. That actual judgment needs someone to typically sit down and look at what the economy and then make a call and say, okay, let's go this way, let's go this way. So I think to try to paint a picture around the evolving role of an actuary, you need to first of all understand that the risk in itself is evolving. We have new types of risk coming into the scene that we've not seen before. The first question was how do you quantify? So when we move from quantification or to estimate what it is around risk, we now try to look for how do we mitigate around it. So for you to mitigate around risk, you need to look for how well are you exposed to that risk as a job of an actuary. To sit down and say, okay, we quantify the risk. By how much is this entity exposed? And then from the point of exposure, you now start planning the mitigation, how you want to solve it. Right, to protect yourself in the long run. So I would say that the job of an actuary is an evolving one. I would say that what the key take home should be is that you can't really position yourself for an actuarial profession if you are not willing to be dynamic in your thinking and change, and to consider new ways of carrying out your research, new ways of carrying out your estimations. We will definitely come upon a time where we will consider using some very kind of dangerous statistical distributions coming up, because some things will definitely happen. The world is evolving, and all of that. So I think that would be my easiest.
Somebody have something to add?
Okay. So maybe I can start off with how our profession started off then. We started off working on the traditional insurance end and mostly on the pension fund. And actually, in those two specific fields, had excellent technical capabilities, but that domain is quite limited. You see, in the 80s and the 90s, when this became quite complicated, it necessitated us to work with maybe some people in the quant side when it comes to investment and also finance. Then coming back to 2008 crisis, we see actuaries dominating areas of risk management evolve here. So we have actuaries working in the as CROs of institutions. Then also regulation came to play, because a lot of regulators really enforced risk-based capital allocation. So we see a lot of the Solvency II on insurance and the Basel regulation coming into play. So regulation helped actuaries now pivot into other areas like the banking sector. Then over the last couple of years, we've seen with climate change, a lot of actuaries are working with people in the climate, like climate scientists. With AI, we see a lot of cybersecurity people who are actually working in the cybersecurity side because of cyber risk. Then also we see with the pandemics, we see actuaries working with a lot of epidemiologists. So in summary, actuaries have been forced to change. As you say rightfully, you have to be very dynamic. You think you're working with data and your model is supposed to be right and whatnot, but you find yourself working in a space where you do not have any experience within, but you have the technical ability to be an advisor in this uncharted and territory. So with how actuarial has developed, we are now working with like extreme uncertainty. If you're not an actuary who's willing to be dynamic, I'm afraid that you'll be left behind. So to buttress his comment, you have to be very dynamic in the ever-evolving space we are in at the moment.
Not much. I think you said everything. Just to say that, you know, the evolving role of actuary is moving with more or less how the economies are also changing, right? And one thing that's clear is that some people have seen the role that actuaries play in the traditional role, and they sort of feel like these guys can also assist in this field. And because of that, actuaries have been moving into new areas, like as rightly said, enterprise risk management, for example, economic capital modeling, sustainability and climate. Even though we still say, like on climate, that actuaries are not the experts, but we can help quantify the risk, we can help you ask questions, right? Questions that will then enable you to plan ahead and probably develop even products. But even now in insurance, there are now insurance products that are, driven by changes in the climate and sustainability issues. In future I see actuaries working in different areas. Not too long ago I saw an advert for an actuarial role with Amazon, right? Yeah. To distribute, they basically move goods, but an actuary can then help in modeling, the time it requires to move goods from one point to the other. Also even strategically. Now you have actuaries working in strategy. just advising companies on what strategy they should adopt, what strategy they should explore. So I see more role coming for actuaries. Thank you.
Thank you very much. You guys have spoken in detail on other questions that I have, so I think I would ask question on what are those key competent skills that upcoming or aspiring actuaries need to have to actually be relevant in this growing economy? Yes, that's the question.
All right, I will start with this. At the foundation of this session, we established that a model cannot always be 100% correct, but a model that will be used for accurate or near accurate business decision making has to capture every possible observable signal. If you can see it and quantify it and model it, then you should actually model it. So in that regard, I would say that beyond just the analytical skills, but of course, the actuarial profession is mathematical in nature. You need to know your numbers, you need to know statistics, your distributions, and all that. So that's analytics. We can't even overemphasize that. But I think you also need to pay attention to detail. You can't be an actuary and just gloss over things. So that particular skill to look at the nitty-gritties and try to capture as much information as you can get to make a better informed decision, I think is something an actuary should look out for. And then an actuary is thorough, an actuary is someone who is willing to get more knowledge. And I think it goes back to the last point that we made. You can't properly do your job if all you know is just what you were taught on. Your business evolves. You have new type of demand upon you, particularly of course now that we are in the risk-based capital system, or the era that we are in our market. And of course, again, you hear a lot of us talking about risk-based because of the industry we play in, and there's a evolving trajectory there to play in other markets. But then, actually has to be someone who is hungry for knowledge, the ability to always want to learn something. Yeah.
Aside from you qualifying, that gets you to the door. So what do you do when that door opens? I think one of the things that you can do to build your skill set is internships. Be very bold about taking internships anywhere. Don't just look at the limited insurance space and say that's where you're going to work. Just work anywhere as long as you're trying to qualify. Another thing that you need to work on is on your communication skills, because your job is to, aside from the technical side, what are you going to do with the results? How are you going to inform the decision maker when it comes to what they're trying to do? So you might talk a lot of jargon and they say, oh wow, you look smart, but they won't understand what you're saying. So develop your communication skills so that you're able to pull them in and they're able to understand what you're saying and they come up with a decision. The other skill I think you need to work on is commercial awareness. In the sense that you can be working in manufacturing space, even insurance space or insurance, then you need to know that how does this company make money, right? So as actually you have to understand how the company makes money, where to maximize when it comes to revenue generation, and where to minimize when it comes to risk. So you can't just sit down and say, I'm just doing my analysis and giving it out. So how do you grow from being technically competent to becoming a strategic thinker? So you have to also develop your critical thinking skills. So strategy and critical thinking will really come to play to remove you from the crowd. So how are you different? The other part is you have to have excellent stakeholder engagement. In the sense that actuaries work with different departments. I'm telling you, you'll work with anyone in the company. I mean anyone. So how are you going to work with different departments? So you have to have excellent interpersonal skills. And another thing maybe which can help is being part of a community like this one, like the actuarial club. Get your network within the space where you want to pivot to. So if you want to go into manufacturing, that's why those are the places where you need to go to so that you're able to pick some of the lessons that other people have picked. Yeah, and finally, what other skill can you have? I think you also have to have a human element in that you need to be very, very transparent and open towards what you can do and what you cannot do, and pivot in areas where you can do best. So I think that's what I can add on.
Now you have so thank you. So you already answered my next question, which is on the communication part. So I don't know if they would like to explain further. So the thing is, we talk about numbers very much. So when I entered the natural space, I was seeing numbers, and at some point I didn't understand what was like coming from the classroom to the what's called to the professional space. I was conflicted. You tell me IB now or Bell, I'm like, what do you mean? Like, I do not understand this thing. And I had to understand that behind the numbers, I needed to communicate to people that don't understand the maths behind it. So I needed to start explaining that, oh, this is why, this is what, this is when, this is how, and this is the future on what I would explain. So behind the technical skill, how do you encourage us to understand that communication part of our numbers? Because it is one part that I find very difficult to explain. I was like, oh, you just need to know that, oh, this is my premium, I got it like this. And somebody asked, if somebody is coming from marketing or sales and asking, why is this, how am I supposed to tell them that this is my premium? So how do you tell the aspiring actuaries on the communication aspect of our numbers? So that's the question.
Yeah, thank you. So communication is very important to the actuarial profession. People tend to sort of separate them and say, okay, you should have technical skill and then communication is soft skill. But for an actuary, communication becomes a technical skill. So you need to learn how to communicate well. One is because some of our concepts are a bit abstract to non-actuaries. So we need to then be able to pass the information that we intend to pass so that they could rely on the information we have passed. Now, how do you communicate effectively? One is to communicate exactly what you meant to say. So, if there has been delay in reporting claims, make it known that this is what you want to communicate, right? So, make the message very clear. But two, also draw the